All right, so in this video, I'm going to show you what sort of return you could expect if you were to invest in the stock market with an average return rate of about 10%, which is not uncommon. So let's assume you're investing $200 a month. At the end of 5 years, you would have only contributed $12,000. However, your end balance would be around $15,434. So you have about $3,400 in interest. So let's see what happens when we change this to 10 years. Click calculate. So at the end of 10 years, you've contributed $24,000 and your balance is $40,000, right? So it's almost doubled. So let's jump up to 15 years. This is still investing only $200 a month. So at the end of 15 years, you would have contributed $36,000 of your own money, yet your balance is now jumped to $80,000. This is the power of compound interest. So let's keep moving and see what it would be like at 20 years. 20 years, you've invested $48,000. Now your balance is $144,000, almost $145,000. So let's take a look at 25 years. Still contributing only $200 a month. 25 years later, you would have put in $60,000 of your own money, having an end balance of $248,000 and some change. That's almost $200,000 in interest alone that you've gained, right? So let's say you're 35 and you're shooting to save some money for retirement. You've been investing for 30 years, annual rate of 10%, still $200 a month. You've only contributed $72,000 of your own money, yet at the end of 30 years, you now have $415,000, almost $416,000. That's a pretty great return. In the next video, I'm going to show you what it would look like if you were to invest in a savings account, and so you can see the differences.